Alright, so this was the result of our yesterday's analysis. Okay, so good morning. This is Moses Michael, practicing Forex trader. Alright, so I promised to do a breakdown of why did I go short yesterday, why did I underline this level and saying I'm expecting price to drop down to this level. So I want to do a breakdown process of what negates my taking this trade decision. Alright, so let me walk you through the process. Alright, the first thing I do is I do a top-down analysis. So at the open of the day, for instance, now after a week and probably about entering Mondays and all, I will check the weekly time frame, probably the monthly time frame before a new month to see where I'm expecting price to draw into. That could be my overall price target. But in this case, since we've been trading yesterday was Thursday, so I decided to start with the daily time frame. We have a break of structure here to the upside, and we have a strong bullish push upward. So where would be the next drawn liquidity is the question I would ask. I could see this other block, but it's unrealistic for price to travel from here in the opening down here because there's a break of structure here. It's going to retest this other block. It's what would I call it? I think the distance from here to here is like 1000 plus pips, so it's not realistic. So, and I believe, like I said, price from what I've learned so far, I believe price draws to inefficiencies. Could be weekly inefficiencies, daily inefficiencies, monthly inefficiencies, and also previous day, week, monthly highs and lows. Also intradays, relative equal highs and lows. Also, people consider section highs and section lows. So for me, I make use of what I outlined here. So I think time will not make me read, but you could probably screenshot and go back through it. So my observation in daily time frame is there is likely no draw in price, here liquidity imbalance. It's not clear. So this is what I could find. I could find a break of structure. I could find another block, but it's not enough for me to tell you I'm expecting price to go downward or upward. Alright, so I'll switch to the 4-hour time frame. So on the 4-hour time frame, look closely. What can you see on the 4-hour time frame? For time shake, there's a break of structure here to the upside. There's an imbalance between this candle and this candle wick. So I think, yeah, so let me delete it. And also you could consider this as another block. Most people consider this as another block, but why didn't I consider this setup and saying, okay, since there's an imbalance, there's another block, it's valid, price could retrace down here and continue on the upside? I could, but I didn't because I saw this candle wick and this candle wick. I consider these two as relative equal lows, so I literally highlighted this and say 4H sell side liquidity because the liquidity on the 4-hour time frame. So I knew quite well that price could come down like this, react to the fair value gap or that block, and go back up and come take this liquidity and go wherever it wants to go. So this could likely happen. So it's literally make this trade setup low probability for me. Like, it's a low probability trade, it's not a high quality trade for me, so it's kind of risky and I shouldn't gamble my money just because I'm looking for a trade setup, you know. So but seeing this, I was like, okay, I'm willing to go short because we've been buying and I'm expecting a retracement, a pullback. I'm willing to go short, but I'll only go short if, though I haven't outlined where price is likely going to draw to, if I see any of my tangible sell model, then I will be going short. So that was why I decided to go short. So, but usually I trade from the 1 hour time frame or the 15-minute time frame. So I was patiently waiting. Let's play. So the new day opened and created what we call a new day opening gap. I usually use a 1 hour time frame to do my analysis. Alright, so this large push. Okay, alright, so we had a breakdown here. There's an imbalance, and I see this relative equal high and this one close to it. So I term this my manual liquidity, buy side liquidity. So this is one of the trade models I use in going shorts. It usually has a high probability of winning, but you could just try it and for yourself. So there are low probability setups like these are probably you couldn't understand, and so just be careful when you use them. Ensure you try it over time. So I'm not saying this is a yardstick for you to start trading up pairs. I only trade gold, and before you trade any pair you have to backtest and backtest. Make sure you do your work. So for gold, for me it works very well on gold and on the 1 hour time frame. It works on lower time frames too. So but when I saw this, I said okay, this is my trade setup. It gave me a setup and I'm expecting price to draw down here. So basically I could have took my take profit here, because this doesn't negate the fact that I'm expecting price to drop down. But one of my biggest problems in trading is perfection. Though I knew price would sweep this, I said to myself, if price sweep this, how far can price go? I said likely price will drop down. Here, over here, we have a break of structure to the upside, and there's a fair value gap here between this candle and this candle. I was like, if price breaks through here, price would likely draw to this small imbalance before going up. So I just wanted to like cash the move. No. So that was what happened, and few pips to my take profit, price reversed and I still didn't close and went back. So well, don't do that. That's really literally not right. So I think I'm learning to save my expectations to places where I know price is definitely likely going to draw to first, and not wanting to cash the whole big move and everything perfection. It's something I'm learning gradually. So price played, and obviously took, yeah. So also something happened when this candle closed. It created a liquidity here and here. In many cases price may not sweep it. Price could go down, but sometimes it's gonna sweep it. So but I think this was my first experience whereby I saw price swept it and came close to my XL before going down. I was literally scared. So price was a few pips away from hitting my TP, and it didn't hit and I didn't close. So but the whole trade setup was actually valid, and this is just me sharing my experience. Well, I hope this content is helpful, and I think I would keep analyzing and dropping my take on the market, whatsoever, my trade, my win, my losses, and in all, I'm actually setting this up for my own personal development and growth. So that's why I'm literally documenting the whole process. So if you find this helpful, you could like, subscribe, and you could share. And also, I'm not going to be 100% perfect or or my analysis. I don't even need my analysis to be 100% right. At least 50% right is enough to make me 14. So that's just the goal, plus your risk to reward. And don't be greedy. Till next time.